More on the virus's impact on the global economy. Want to get to Peter Boockvar, CIO of Bleakley Advisory Group. Also, Derek Scissors, Asia economist at AEI. Good morning to both of you. Peter, I'll start with you. You listen to what Steve just had to say. How do you think about it? What kind of math are you doing?
Well, I'm of the opinion that come springtime, this sort of dies out. So the economic impact is obviously immediate rather than anything long-lasting. And I think for perspective, the World Health Organization said that 3 to 5 million people a year get severe flu, and about 250 to 500,000 die from it. Right. So I think we need to put this in perspective before we all freak out. Again, I don't want to downplay the economic impact, but I think we only have a few months of it before it actually just goes away.
Derek, where do you land?
Similarly, I think the short-term economic impact is going to be very stark because of the nature of Chinese decision-making. Information moves slowly in their system. They tend to intentionally overreact because they know they don't have good information. So you see these shutdowns. You're going to see a very big blow to economic activity in China in the first quarter. But activity is not productivity. Somebody said earlier, workers being affected. In this case, we don't see a blow to the labor force. We don't see a blow to the capital stock yet, and we all hope we're not going to see it. So I think the first quarter is going to have some terrible numbers. But I think, a year from now, economically, we're not going to notice this any longer.
Peter, I know you're not a stock picker, but one of the things that we're always trying to gauge and figure out is, when you look at a market fall this way, or at least this morning, whether this is just a sign of more bad news to come, or frankly, whether it's an opportunity. I hate to call it that, but that's the question of the morning.
Well, I do pick stocks. I do think, though, that we have to put this self in context.
Just always bearish, but
no, I'm not wrong stocks, Joe. The sentiment got extremely bulled up. So that's the backdrop for this. And you look at investors' intelligence last week, bulls were just shy of 60. Citi's panic euphoria weekly index is fully in euphoria state, and according to their numbers, that there's an 80% chance that a year from now stocks are down. Again, just based on their statistic. So the sentiment was just all one-sided. So that's the backdrop for what was probably a needed rest in the market, and this just so happens to be the catalyst for it.
Derek, I wonder, in the analysis that you have here, is it different this time? Do you put all of the different advances that Joe was talking about, that I was talking about, organizationally, and say, you know what? It's probably more unlikely. In other words, the tail risk always exists, but it's probably more unlikely this time than it might have been in the past.
Well, obviously, I'm not a medical expert. I would say I'm guessing we know it was different already. The reason being the changes have been, as you guys talked about, the communications. You can fly directly from Wuhan to cities in the United States as well as cities around the world. If we had seen a very quick spread out of that area, it would be different. We're not seeing that. We're seeing a spread. We're seeing tragedies. But we didn't see that, oh, my goodness, global communications has spread this everywhere really fast. Part of the credit has to go to the heavy-handed but effective reaction of the Chinese government. I don't think it's different this time because I think we would know already that it was different.